Hi, everyone. Thank you very much for joining this workshop today. My name is Marina, and I'm coming from the European Crypto Initiative, which is an advocacy group based in Brussels in Europe. We are going to talk today about regulation, and we have first a panel. We have a very special guest we're going to introduce later. But today we are also going to do a workshop after that. And basically the first part is going to be a panel. After the panel, we're going to sit in groups. This is why we have tables here. And we are going to discuss different topics. Some can be DeFi, MEV, staking, wallets, privacy, whatever you're interested in. So you're going to join each group and each table. And we're going to have moderators helping you with the discussion. So this is the plan for today. I wanted to give 2 minutes to speak also to Florian, but I think after that, after a short intro, we're going to go quite straight into the panel. We're very eager to hear what regulators have to say about crypto regulation.
Thank you, Marina. I'm just as excited as you about this workshop and the panel, and welcome everybody. Excited you're here. Thank you very much.
Thank you. So, thank you. I would like us to join all together our speaker. We are very privileged to have, I don't know if you can change the slides as well. Thank you very much. So we're very privileged to have a regulator here with us coming at Devcon for the first time. So I hope you like the conference. From the Japanese FSA. And it's Ishida Urushoke. Very, very much thank you for joining us. And I think it's an amazing, in a way, speaker as well, just because of all your experience you have in crypto. You had a lot of, a little bit unusual story about how you came into crypto and how you started learning about it as well. But I wanted to maybe start with this. Apparently, you have studied computer science as well. You were very interested in crypto. You have even been running nodes, etc. So maybe give us a little bit of introduction on this side as well.
Sure. So thank you, Marina, and then good afternoon, everyone. So thank you for having regulators like me for this developers conference. Obviously, I'm a minority among all of you, but so Japan FSA is a regulator like US SEC or Bank of Thailand or UK FCA, and then we regulate basically everything like banks, insurance company, as well as crypto service providers. And then what I am doing is to encourage innovation with emerging technologies such as blockchain and AI. So as a chief fintech officer, one of our important missions is to bring international experts like you to come into Japanese market, because we are more competition among local players, and we want to make Japan as one of the a global hub of crypto and the blockchain industry. Then personally, I spent 2 years as a blockchain researcher at Georgetown University in Washington, D.C. So I started my career as a regulator back in 2010. And then since then, I have been doing not boring, but traditional financial regulator's job. But suddenly, my boss asked me to do something about blockchain. And I had no idea at that time what is blockchain and why do I have to go there. But somehow I decided to go there, and it was fascinating because I had a lot of opportunities to discuss Bitcoin developers, Ethereum developers who have totally different mindset from regulators. So, basically it's like 6 or 7 years ago. Basically, they hate government, they hate regulators in many cases. So when I say, I'm from regulators, so I don't talk to you anymore. So this kind of things. It's a very kind of unique opportunities for me to learn how we can communicate with engineers and other business people coming from crypto industry. Then I spent a lot of time to learn about internet governance and the blockchain governance, and then we realized we should develop kind of mutual understanding between regulators and the developers and the business community to make blockchain really, to have a really, to make our society better with this innovative technology. So I'm happy to talk anything today. Thank you very much.
Thank you so much. This is a very fascinating story. My next question would go more into how Japan is regulating crypto assets. You were one of the first to actually react to the crypto industry, to exchanges, because you had this specific event that happened with Mt. Gox in 2014 already. So after that, you have also been pretty, I would say, famous for some kind of protecting your users from other exchanges collapse that happened recently as well. So what is the whole story of the Japanese FSA and how the regulation came into place from the beginning until now? Maybe I think it's a little bit more focused on exchanges, but that's the interesting thing for us.
So 10 years ago, more than 80% of Bitcoin transactions was taking place in an exchange in Tokyo named Mt. Gox, which is run by a French guy. And then regulators didn't know that at that time. But suddenly, 500 million US dollar equivalent Bitcoin was disappeared. And then not only Japanese investors, but also international investors lost their Bitcoin. And still, court process is ongoing to get their fund back. So we realized that it's a huge industry and it's probably growing very much in the future. So we decided to make a regulation for crypto asset service providers. So that's why Japan is one of the very first country to implement crypto regulation back in 2017. So basically, we require crypto exchange and to do kind of KYC or some, customer protection requirement. Then, even after that, we had another series of incidents. If you may know, CoinCheck is one of the largest Japanese exchange. And then again, nearly 500 million US dollars of name was hacked. And then even after we have a regulation, so we are kind of freaked out. So we have to tighten regulation. That's why we introduced so-called cold wallet requirement. It's a requirement asking exchange to reserve more than 90% of customers' assets into offline environment. So that's something industry didn't like at all because they need a liquidity management. So it doesn't make sense from business perspectives to put most of their crypto assets into cold wallet. But actually, that regulation worked when FTX incident happened because FTX Japan segregated their customers' assets within Japan. That's why, unlike many other countries, Japanese investor got their fund back much earlier than other countries' investors. So that's something we made it. But I don't think I believe we have to update our regulation according to the development of technology. So these days we have MPC wallet or some other technologies that makes custody safe even though in a hot wallet environment. So technology is changing. That's why I'm here to learn what's going on in this industry, and we try to keep updates to develop a policy that makes sense both industry and the ordinary people and the regulators.
That's a very interesting story because from the European side, we have started in 2017, but we still have not yet, a regulation that is applicable at this moment. So it took us quite a long time. And you had regulated exchanges already in 2017. So that was a much more efficient, I would say, a governance from a regulatory point of view. I think the consumer protection is really something that you achieved, and it was really efficient from the whole story that happened with exchanges. And the very interesting thing, also the approach on a cold storage, and basically, in a way, segregation of funds and being really careful with what and where the funds of the customers are. Right now, you're thinking about maybe updating, like you mentioned, and learning more about the technologies. But what do you think in general is the best approach for consumer protection? Like what is really important, what is really efficient to make sure that the consumers are not losing funds and that they are safe, which is in a way some of the most important goals of a regulator?
So I think what matters is balance. So in general, innovation should come from open source community, like the internet and then Bitcoin. And then if we introduce strong regulation from day one, maybe it could stifle innovation. So now we have a regulated world, such as centralized crypto exchange, and then not very much regulated world, like Bitcoin network or some DeFi protocols. And then we have to be careful about what we should do to have a balanced growth. So from consumer protection perspectives, so anyone can have easy access to centralized exchange. That's why we put a kind of tough regulation on them, because it's on-ramp, off-ramp, and it's ordinary people will have to change their fiat currency into crypto. That's why exchange is heavily regulated. And then when it comes to DEX or lending and whatever, basically it's a kind of market for crypto enthusiasts. So it's like probably they know their risks and they know what they're doing. So it's a kind of place that they should take their responsibilities. But on the other hand, when we think about anti money laundering or terrorist financing, so these days North Korean and hackers are kind of attacking bridge protocol and then DeFi protocol, and then they are storing tons of crypto assets. So that's something we cannot tolerate, because consumer is okay because they got a compensation. But if the crypto was transferred to North Korea, basically we can do anything to prevent that. So that's consumer protection in one thing, but money laundering, terrorist financing, and financial stability is another regulatory goal. So we have to think both of them.
Actually, financial stability is an interesting one because it was followed and it was important for many regulators. And somehow they usually connect it to the regulation around stable coins as well. So I would assume that, as you mentioned, that's also something that it's kind of important for you as well.
Indeed. So stablecoin is very promising. So that could be a bridge between TradFi and then DeFi. And then indeed, there are so many Japanese financial institutions and the enterprise are looking at stablecoin to make something happen. So that's why we have introduced stablecoin regulation June last year. And we are now discussing both local and then international potential issues of stablecoin potentially denominated in JPY. So you're right. So that could have a financial stability implication. So basically, it's like banking deposit, but it's good for cross-border transfer and then some payment or some investment. So that's has a much flexibility. And then that could be good for financial stability in a sense, because we have more resilient and then kind of faster payment system. But at the same time, we have to think about where that reserve asset are protected and then how that internal control and then governance are put in place for both issuers and the intermediaries. So that's something we would like to have a more engagement with industry players. So we have a centralized stablecoin while decentralized or kind of algorithmic stablecoin. So there is a variety types of stablecoin and a different governance mechanism. So there is no one size fits all solution. So we have to think about each of them individually.
Since we started with centralized and decentralized stablecoins, I would go to the next question, which is, non-centralized entities, like non-centralized exchanges, which are usually called decentralized exchanges, or any type of DeFi projects, DAOs, etc. We have seen that IOSCO, for example, the International Organization of Securities Agencies, has also written a report on DeFi. They have written some suggestions to how to regulate DeFi. They were, in a way, talking about the risks and how to limit those risks. What are you thinking about those, no very, in a way, centralized entities? And of course, it's a whole spectrum. You can be in a different I would say, level of decentralization. But it is an important topic, and it seems that it has been important enough that international organizations have been talking about it and even, writing paper and doing research on that.
So I was in Malaysia, Kuala Lumpur, 2 weeks ago to join IOSCO meeting among regulators, and then the topic is DeFi and the crypto assets. So many regulators, including the US SEC and the Malaysian Security Commission, are there to discuss how we could potentially mitigate the risks that a DeFi could bring. So basically, so DeFi is very different by project. So sometimes DeFi is just in name only, and then it's a kind of marketing word. So we can actually identify someone who have a significant influence over that arrangement. In that case, they could potentially update their protocol or change parameter, or get some fees out of that arrangement. So in that case, we might have, we could potentially identify someone as a regulated entity and apply, similar regulatory requirements that we are applying for centralized exchange. But having said that, it is difficult to identify who is actually playing the game. So probably we know, Twitter name on the, but we don't know where they live and what the actual real name of those developers. So that's quite difficult. But still, there are some entity like foundation or labs, and then some, committee or legal entity. So that could be a kind of contact point for us. So what is kind of encouraging for us is, some DeFi community are willing to work with us. So I'm co-chairing Financial Action Task Force Crypto Assets Working Group. So it's about, KYC, travel, and then some others. And I believe, some of you don't like ML regulation, but we invited a lot of DeFi players and they have a good discussion over a couple of years. So we're working closely with the industry to come up with good solution that works both of us for the future.
I think the industry has been more and more mindful of the DeFi in name only as well. And we're trying to understand internally also what are the standards, what decentralization actually mean. And I think it's also more and more, in a way, possible and important that we really strive for decentralization within the industry as well. So hopefully we can, I would say also from an industry perspective, give a little bit more as a kind of a feedback or a summary to what the industry really thinks those elements are and how to really define that. On the other topic, you mentioned you are part of the FATF as well organization. So those organizations, I think, are trying to kind of find a global approach to crypto when it comes to different topics. How do you think this approach is in a way playing? Are we really going to be able to have a global regulation, or at least regulation that is compatible to each other, and certain standards that would allow the projects, the technology to be global and to basically, in a way, also approach and work in different jurisdictions?
So international organizations like FATF, IOSCO, FSB are trying to set a kind of minimum standard globally to ensure kind of level playing field. Then FATF is taking care of ML safety part, and then we have a standard, recommendation 15, which is all about how ML safety control should be in place for crypto service players. And then the problem we are facing is that there are many countries are still not implementing that recommendation because it's, to be honest, it's very difficult. So it's some countries like some small countries in Asian Pacific regions, they are struggling to have enough human resources and then tech capabilities to develop their regulatory framework. And then it's not only about creating regulation, but they have to do enforcement or supervision like every day. But it's quite technically challenging, and then probably they have to use blockchain analytics tools and then some others. But I think they need more education. That's why part of it's focusing on how we can provide technical assistance for those struggling with implementing a recommendation. So we will have a seminar, and sometimes we will invite private sector players like exchanges or blockchain analytics to provide us to share their kind of risk assessment and then to share how to use their tools, for example. So that's ongoing challenges, but hopefully we have a good regulation all over the world.
Many learnings on both sides, for sure. So another topic that has been recently discussed, and I would say mostly in the last few months, is the adoption of crypto and, let's say, in general, the technology by the institutional players. And also, for example, tokenization. That is something that might be interesting, again, more for a traditional finance point of view and traditional industries. How do you see this potential? Are those activities needing regulation, to actually be flourishing?
So, yeah, personally, I believe in the potential of tokenization because, it's like, dream, but, if assets and the liabilities on banks' balance sheet are all tokenized, it's maybe easy for regulators to monitor the transaction because, currently we kind of trust banks. We have an authority to ask banks to submit some data to regulators, and then we will analyze that. But ultimately, it's a trust is needed. So sometimes, they might give us, fake data, and sometimes, fraudulent disclosure incident happen all over the world. So what is great about blockchain is transparency and the auditability. So that makes not only industry job, but our regulators' job much easier and much efficient in the future. So that could be a future. But of course, there are potential risks. Like, we can tokenize a liquid asset like our real estate, but token itself is very liquid, potentially, but the underlying asset is still illiquid. So we have to think about mismatch of liquidity and the maturity. That's one thing. And then we also have to take care of, smart contract vulnerability. For example, it's a kind of different types of operational risks. So I think there are both opportunities and then risks. And the tokenization are not taking off that much from my perspective, partly because of, we are using a different blockchain, and there is no interoperability. That's why we don't have a good secondary market. And another thing is that we don't have programmable payment layer, so we can tokenize financial instruments like corporate bond or real estate, but we need a digital money such as stablecoin, tokenized deposit, or potentially wholesale CBDC. But they are still not ready very much. So I think it's a long-term project, but hopefully we will have a lot of tokenization project in the future.
We mentioned IOSCO and other international organizations a few times, and we know also that IOSCO was looking into any type of initiatives that would share more about and educate more about crypto, mostly thinking about consumer protection. Can we do more as an industry? That is a question for us, of course. Can we share more? Can we educate more anyone that is, for example, using our products or the general community? But I know that different financial authorities, they were also thinking about, can we do something? Can we educate the community and our users? What is your opinion on this?
Absolutely. So, and then regulators need education as well because, basically, it's quite difficult for us to understand the technology itself and then its kind of regulatory implication. So we need a kind of input from industry experts like you about how we can achieve our goals. So we are tech neutral, we are agnostic to technologies applied to the financial system, so we don't care it's blockchain, AI, whatever. And what matters is to protect customers and then to prevent financial crimes and then to ensure financial stability. So current regulatory framework has something like disclosure requirement or KYC or travel rule, but it's it's just a mean, not a goal. So our goal is protecting customers. So if technologies could achieve same goals with slightly different approach, potentially, we can welcome that. Instead of traditional KYC, we could potentially use, I don't know, DID-VC or privacy enhancing technology, zero knowledge first, MPC, whatever. So, but that it's not something, regulators can come up with. So we need a kind of counter proposal from industry. So if you don't like current regulation, we are very welcome. And we appreciate and kind of alternative approach that the industry could come up with.
Actually, we've been discussing a lot about this at the side events before Devcon, and I think there's going to be a lot of discussion about that during Devcon as well. So it is true, it's also on us to try to propose certain solutions and to try to use this technology in a way that would be, at least for this community, it's very important, privacy preserving as well, if there are options for that. And of course, this is why we're working on this tech. So that's very useful, thank you. And the last question, before we start with the open question for the audience, I hope you have some. You mentioned a few times that you want to learn from the community, that a dialogue is very important. So I know that there's been different organizations that you've been talking to, and also some kind of a self-regulatory ideas and organizations as well. But how important, how in a way open, I would say different authorities are or should be in order to, do the kind of, again, to protect the users to the maximum amount possible, but also how can we be useful as an industry when we are talking to regulators, when we are having this great opportunities to discuss with you also in person?
Sure. So in many cases, regulators are not enemy to industry. Otherwise, we are willing to be a part of the community to make our society better with blockchain technologies. So actually, we welcome any kind of dialogue with industry. So I want to just say, please contact us and then, have a discussion. And then that is very important because, when we look back the internet history, there used to be a telecom regulators regulating telecom industry, but currently no one is regulating internet itself. They regulate, ISP or some others, but kind of they changed the way of regulating industry and it works. So it's a kind of miracle that we have. That's why now we can use internet. So otherwise, we are kind of socially died during the pandemic. So we should appreciate internet innovators and then regulators. And then hopefully, blockchain could be something like the internet in the future. In order to do so, we need a more kind of multi-stakeholder discussion like we have today, so that have a good discussion.
Thank you again very much for your time and also for your willingness to take questions from the audience. So now is your time. Do you have any question on the topics of regulation? I would say specifically to, of course, the Japanese market and jurisdiction, but maybe also globally, since we've discussed the regulation coming from international organizations as well. Any questions? Yeah.
Hi, thank you for your time. What would be something you would like to see in Europe in terms of the regulation?
Thanks. So they will implement MiCA, and they already approved some stablecoin and some crypto asset service providers. And then actually we have a discussion quite frequently because we need a kind of harmonization among regulation. So I cannot specifically comment on other countries' policy, but basically European regulation and our regulation are quite aligned. So then what we will do more in the future is, basically blockchain is global by nature, and then some stablecoin issued in Europe could come to Japanese market and vice versa. And then maybe it's good for industry players to have a kind of similar regulation, because you have to comply with different types of regulation. So that's something we can do more. And then now, after the election, maybe US regulators will have some thought, and then many Asian regulators are taking different approach. But specifically to Europe, they are quite advanced, and then they will have a global player regulated under the MiCA, and then they have a good, privacy protection regulation. So that's something we can talk more, and we hope our regulation is not kind of too much onerous to the players like you.
Thanks, Alon, for the context. I would like to know about the adoption rate in Japan, because it's super clear how is the regulation, but I think that also is super important to understand how is the adoption in the countries.
Thank you. So I don't remember exact number, but there is millions of accounts already there. So basically, we have 30 registered exchange in Japan, and I don't know why, but Japanese retail investors very much like crypto trading. That's why we had Mt. Gox 10 years ago. But still, retail investor like crypto. So if you are doing some kind of retail business, I think there are business opportunities. And when it comes to large investor, like institutional players, basically they are very conservative, unlike some other countries, family office, hedge fund. But finally, they are looking at blockchain industry, crypto industry. So they are interested in investing in some crypto asset or using blockchain to have a real use case. So in any case, I think the Japanese market is growing these days.
Any other questions?
Okay, since you said regulators do actually appreciate the transparency of cryptocurrency, what's your take on the rise of zero-knowledge proof technology and the potential implication of anonymous transactions?
Yeah, it's a good question. It's a kind of double-edged sword. So, for example, if we think about interbank transaction, they should be private. Otherwise, it's very bad from financial stability perspective. So even regulators want some privacy for specific use cases. But if we think about something like privacy enhancing technologies for anonymous transaction, that could be very problematic, especially for ML safety perspectives. So that's why some regulators are taking enforcement action for some mixers and some others. So I try to be tech neutral, but if specific protocols are badly used by illicit actors, maybe we'll have to take some actions. So it's use case and its intention of the project, and then it's not yes or no question. So we will have a discussion and what in this protocol for and who are actually using that. So we should do an evidence-based policy making and regulation.
Any other questions?
Do you think AMLC CTF regulations are excessive when it comes to crypto, at least in some use cases?
And so your question is, regulation is excessive?
Yes.
I'm in charge of ML regulation, so I shouldn't say yes, but so rather, as I mentioned, we are now applying, conventional way of ML safety to crypto industry, but, technology is different. So maybe, I don't know, but the optimal way of doing ML safety could be different. So rather than just, taking photo or, sharing passport or whatever, we could do something more like using NFT or BCDID type solution could be efficient. So that's why we are now kind of doing some, POC with industry to kind of, consider how we can potentially update our way of doing. So I think that's a long-term goals. But what is fascinating about blockchain is that some supervisory function regulation could be embedded in smart contract itself. So currently, regulators are doing regulation by human, but we will see a kind of machine-to-machine transaction in the future very much. So it's probably impossible for regulators to do the same thing in 10 years in the crypto asset industry. So we have to change, and then we are welcome about innovative solution.
We had one more.
Hi. So yeah, you see more traditional companies, exchanges making their own layer 2s on Ethereum. So Base, for example, from Coinbase, but also in Japan, Sony with Sonium. So in what way do you look to them to regulate? So it's sort of like a hybrid permission kind of thing. So.
Yeah, it's a great question. So many Japanese enterprise like Sony are developing their own blockchain. So we will see so many layer 1, layer 2 solution, private, public, semi-public. And then I'm kind of observing, global layer 1 project, if you may know. It's a kind of unified ledger, and then kind of validate that it's big regulated banks, and the financial institution can tokenize some asset, and then CBDC could be issued. So we will see a very different types of blockchain, and then a lot of DeFi project and tokenization project are now taking place. And then what matters for us is probably not about technology itself, but more like, how we can achieve our goals. So we don't care it's a public or private, but what matters is like, consumer protection, as we discussed. So if it's a permissionless blockchain, we cannot identify the kind of validator and the manager of that blockchain, but it's okay if still customer is protected in the financial crime is prevented. So it's more like, use case and economic implication rather than underlying technology itself.
Hi. So I think we've seen over the years how kind of technology has advanced such a much faster pace than regulation, and regulation is now starting to catch up. But in many cases, the regulation is very much rules-based, and there's a risk that that regulation soon becomes, inadequate for future activities as well, and that's why we're already seeing, regulators looking at different activities within the ecosystem around, staking and DeFi-related activities, everything else. How feasible is it from a regulator's perspective, such as the Japanese FSA or European authorities in the context of MiCA, in drawing up more principle-based regulation as opposed to specific rule-based legislation, which risks, becoming outdated and not being able to cater for, the broad spectrum of activities that are being carried out within the space?
Yeah, that's a great question. So you're right. So it's probably impossible to describe everything in our regulation about what you can do and you cannot do. So we try to take, principle-based or risk-based approach for this space. So what we are asking to industry is to identify risks and to think about potential risk mitigation measures, and then we will monitor that. And if we think it's insufficient, we would ask you to improve the operation. So that's a basic concept. But having said that, we kind of still have a checklist for compliance because, some industry players want that kind of checklist. So it's a balance between kind of prescriptive regulation and then principle-based approach. And then in Japan, we have a self-regulatory organization, and then they have their self-regulation. So there is more details, and it could be changed easily compared to law and then ordinance. So, and we are kind of two-tier approach. We have law and then more detailed guideline published by FSA, and then self-regulation developed by an SRO. So I hope that works for now. But what matters is not only regulation and then, but supervisory judgment. So if we sometimes it's a kind of judgment by regulators what is good and what is not. So everything is not written in that regulation itself. So that's why we need a discussion with the industry. So I hope that kind of communication could work.
Hi, you talked a little bit about coordination with the European and potential future U.S. securities regulators, but I also know, in the area I work in, which is tax, there's what I see is a lack of coordination between the securities regulators and the tax regulators. There's a regulation or a guidance, a global guidance called CARF that requires any value transfer on any decentralized network to be KYC'd. So even if you were to accept decentralized identities, maybe zero knowledge proofs on top of those, it still, we have another regime that requires identity to be disclosed, so it kind of defeats the purpose. Can you talk a little bit about the dynamics maybe within the country between the different regulators? And maybe there's others that I don't know about. There's tax, there's securities, maybe there's others who have a stake in this as well.
Yeah, that's a, I think, great point. So we are not tax authority, so there is a different ministry taking care of tax. And then, so you mentioned about CARF. It's a OECD initiatives. And then what is lucky for us is, financial action task force are also located in OECD building in Paris. So we often invite a CARF representatives to our meeting and then to share their development. So what we have in common is, the need to trace crypto transactions. So both, financial regulators and the enforcement officers and tax authorities need to trace and that blockchain and the crypto assets. So that's something, we can share, but we also have slightly different kind of objectives as ministry. So yeah, it's a kind of a little bit tricky discussion, but what is at least needed is to share information and then to work together, both locally and internationally. And then I think, the place like OECD is a very good place for the multi-stakeholder discussion. And then we have some startups to help people to pay tax appropriately, but it's still challenging. So I guess, not many crypto transactions are, traced enough by tax authority, so that could be a potential challenge for the future. So, yeah, I don't have a very good answer to your question, but what matters is further coordination.
I think there was another question.
Hello. So I also had a further question on coordination. So there's one coordination from the perspective of like uniformity of some fair level of regulations. A lot of people want that. But you also mentioned something around some countries might not have enough resources to implement that. So due to lack of resources, you might find like a country like Kenya or Nigeria might have the same regulations as the European Union, but the licensing process takes close to 18 months for an exchange to obtain that license. What is your perspective? Because I'm working on drafting some regulations in a bunch of African countries, and I wanted to get your perspective on something called a fast-track licensing approach. That if somebody is licensed in MICA, all they need is just to pay the licensing fees, because that is what the government cares about. And the fact that they're licensed in a well-resourced jurisdiction that has done enough due diligence on them, that is sort of a standard that just allows them to get the license within a week. So if you're licensed in Europe and you want to scale in Africa, you just present your European license, pay the licensing fee to the country, and you have your license within 24 hours.
Yeah, so regulation and the licensing and the supervision are very, very different. So potentially, any country could have a similar regulation to that of Europe or some other countries, but it's about document, but licensing and then supervision is more like practices. So, regulators have to understand their business model and then the contents of application and then what is the risks. So that kind of things are kind of not easily achievable by emerging countries regulators. So that's why, as I mentioned, we try to give assistance to those regulators. And then, so we often organize, online webinar for emerging countries regulators to share how you could potentially implement travel, for example, and how to accept application, something like this. So I hope that works in the future. But some country, like small African and Asian country, decided to prohibit crypto asset trading, but because it's easy, seemingly. But maybe it's not enough just to ban crypto, because they have to make sure that crypto trading is actually not taking place in that country. So our standard doesn't say, every country should have same regulation, but we set kind of minimum standard. And then there is some discretion by countries to develop, additional requirement or, to ban crypto transactions. So it's not easy, actually. So even Japan, we took some time to develop supervisory practices. So, but, they have to start now, otherwise, some bad actors are exploiting such kind of weak regulation. So, yeah, I have no specific answer, but yeah, we have to work together.
So I would say we conclude with a question. You were very generous with your time. We spoke almost for an hour. So thank you so much for taking all the questions.
My pleasure. Thank you very much.
So this concludes the first part of our workshop. We have more stuff for you if you want to stay, and we very much welcome you to stay. We wanted to go into different groups and discuss topics. So this is a workshop, and it's a workshop place. We really wanted to do it in a kind of interactive way. We will have few moderators that are helping us within the discussion, and you have the opportunity to also speak to some of the most knowledgeable lawyers in the space. We have here Jon from Uniswap, we have also Karen from Gnosis, and we have Agatha from Status as well. We are basically going to discuss just internally. It's just, I would say, a workshop, and whatever questions we have, whatever discussions you want to have internally. And we also, what we want to do is basically discuss how to talk to regulators. That was the title of our topic on our workshop, because we see that many times more and more, I would say, tech developers, but also academics are asked to discuss with regulators. We're also seeing that there's more and more need to basically discuss certain topics that could be very technical, like account abstraction or other discussions as well. And I think that in this discussion, we can also benefit one from each other. So I welcome everyone to join the tables. And you just join the group that you are mostly interested in. So we'll have the group that is discussing DeFi, one group discussing privacy, and one group that is going to discuss specifically MEV in staking. So if you're interested in one of those, just let us know which one. I would say that this table should be the DeFi group, if anyone wants to join. This one will be privacy. We'll also have Yara helping with this one. And if anyone wants to discuss MEV staking, it's here. And if you want to discuss any other topic that I have not mentioned, let me know, and we're going to create a new group as well. Sorry? Stablecoins? Okay, perfect. Yeah, I love this. Let's make this one stablecoins there. Any other topic, anyone? Okay. So the discussions are not going to be recorded. It's really for our internal, topics. So I would say we can be a little bit more chill when discussing. After the 30 minutes discussion, we come back and everyone will just very, very shortly report on this. So privacy, I think privacy is here. DeFi is here. This is staking and MEV. Yeah, and this is stablecoins. Okay. Hi. Do you recognize me? No. Is this
We did an event on LinkedIn Live for Bharat Web3 Association.
Oh my God!
BW.
Oh, so
Yeah.
cool! It's so nice to meet you here.
Glad you put this thing together.
Yeah, thank you. So you are MBB and stake.
Yeah, I'm thinking
Okay, perfect. Huh? Or maybe we should just join the DeFi group.
Yeah.
Would that be a thing? Yeah? Okay, let's just bring chairs together. No, thank you. You can just help with the moderation of the privacy. And I met Fatima? Yeah.
Yeah, and she didn't know anything about it.
Oh, I
And
told her, but
her,
okay.
and she said she would come, but
Okay,
I don't
amazing.
know if she would.
Okay, okay. So yeah, you can go there.
They're over. They have two super brains. I will. That's what I'm thinking. This is quite.
So this is stablecoin, yeah?
Only 3 million people transacted. That's 5 billion.
What's
So
the
you can
what's the
imagine.
population again? Total
Population of Kenya is about 40 million.
40. That's 3 million.
50 million. And now only 3 million active crypto.
Yeah, and that's the transaction volume from those 3
Transaction
million.
for
That's
3 million people is 20. It's 5 billion.
5 billion. Divided by per person, that's like.
No, so the thing is, it's interesting, it's not even per person. 95% of that 5 billion is institutional.
You know, of course.
A lot of African countries heavily import stuff from the West, and due to dollar limitations. So the biggest use case that has pushed stablecoin adoption is dollar limitations from local banks. You know, African countries are heavily dollarized.
Of course,
So for me to buy something from my Tanzanian neighbor,
I
need that dollar. I need a dollar.
Of course, it's stable as well because you don't trust. I don't know what the Kenya local currency is.
Tanzania doesn't want to hold a Kenyan
No, you probably don't want Tanzania and whatever the currency is as well.
So
we don't have a single currency that we can use within, even with our neighbors. You know, Kenya borders Tanzania, but they have to trade in the dollar.
Of course, I would also use the stability. You want stability, right? You don't want fluctuating foreign currency.
As you said, Tanzanians don't want Kenya shilling. Kenya shilling don't want Tanzanian currency.
That's a shame.
Yes, so that's why institutions are using stablecoins because of also the lack of dollar shortage.
Yeah, and that's of course. So we're talking about banks, right? Or we're talking about
no banks,
very big companies.
We're just talking about fintech.
Fintech. Okay, right.
Supplying stablecoins to their clients. Their clients will be importers, exporters of tea, coffee, fast-moving consumer goods, oil, and stuff like that. We have people in Nigeria who process about $300 million.
Oh wow! This is actually great. This is a great example of like crypto because I think it's positive change because like trading is like
So yeah, we can conclude that the biggest use case for that volume is institutional.
Yeah.
Institutional use cases of stablecoins.
So are the banks? So wait, are people trading with the banks to get USDT, or are they?
No,
banks themselves doing
banks
it?
Don't. They use virtual asset service provider.
They use
or
OTCs.
Okay, and they do deals with who?
Companies with OTC desk.
Like outside of Kenya, right?
No, within Kenya.
Within Kenya, they're also. Okay.
For instance, if you have USDT on one end, you can just come in Kenya and set up an OTC desk. It's not illegal, that's a good thing. So you tell someone, okay, deposit Kenyan shillings in my account. I'll set the USDT
to your wallet.
But it's over collateralized and all that because of. Okay, I'm not sure what the.
No, just normal FX rate. Now that is another interesting thing you mentioned. You see the stablecoin market.
Yeah, it's much better than.
They have the opportunity to speak at the Devcon workshop. Please come. It's not that bad. I think our group will start first because I know what we discussed, so. Okay. Just 2 minutes, 2 minutes. I'll help you summarize it. This is your microphone, and you need to come there if you can. So I will start with a very like half-a-minute introduction. Our group was talking about stablecoins, and we were very interested to see how other jurisdictions regulated stablecoins. So if you can join me. That was the summary, but then we went into reverse solicitation and different topics. So, yes, here. Just two, very short.
Hi guys, my name is.
What's your name and where are you coming from?
My name is Kakai from Nairobi, Kenya, and yeah, awesome to be here. So yeah, our group was talking about stablecoins. But for context, we had to like give at least a little bit of background from our perspective on what we understand as stablecoins. So fact number one was that, did you know in Kenya alone about $5 billion was transacted in 2024 in stablecoin transaction, and the average number of consumers in Kenya is about 3 million people who are actively using crypto out of a population of 55 million. The average, the number of stablecoin transactions in Nigeria was about $20 billion in 2023 alone. Now, the biggest use cases for this specific jurisdiction, and it's similar to a lot of African countries, is because there's a lot of dollar restrictions and dollar shortages. The government really, or the central banks really hold on to the dollars. So there was a very big demand for a parallel dollar market. So everybody who is doing imports, exports, and all that found stablecoins as an option, because with stablecoins you could transact $300 million in trade as a single entity. I mean, an African bank can't give you $300 million. And if they did, they'll give you at a very expensive rate. Stablecoin issuers provided very cheap dollar rates. So that was the context for why we are passionate about stablecoins and why a lot of Kenyans on that table. Stablecoins. Okay. Awesome. So in terms of stablecoin regulations, African countries do not have any form of stablecoin regulations, but the only country that has some form of virtual asset service provider regulations is South Africa. 300 companies have submitted the applications down there. We are working on pushing for Kenyan regulations, but then again, it's VASP or CASP regulations, not stablecoin regulations. That means a lot of stablecoins that will be used in Africa for all those volumes would look towards Europe for how they're either regulated in Europe or Japan and Singapore, and just pick it up from there. I mean, so that's now diverted our attention to look at MICA. What does MICA say about stablecoins? So there's asset reference tokens and e-money. I won't get the details of that, but two things we're looking at was the MICA's requirements on reserves. So first question was how much does MICA look at, how much should a stablecoin issuer have a reserve in MICA? I think it was about 15%. But then the moot question was, that only works for guys who are issuing liquid stablecoins, like USDC, where you deposit US dollar on Circle account, Circle Mint, and they settle in USDC. But if you are doing a bond-backed stablecoin, like Mountain Protocol, or like or any other bond-backed stablecoin, whereby your backing is not a liquid dollar in a bank, but it's actually a treasury bill, how would your classification look like under MICA? So we were still brainstorming on that. Then number two, which is of interest, was decentralized stablecoins. So there's an decentralized stablecoins. The question was, the moot question again for us to think about was, there's an exemption for under MICA on decentralized projects, like decentralized projects are sort of exempted or they don't want to be dealt with for now. So does that mean that as a decentralized stablecoin issuer, I can plead that exemption and continue circulating my stablecoin across Europe? So that is something to think about. And then that now led us to reverse solicitation and offerings. And there was conversations around now, if you are offering to MICA, to European Union citizens, you need to comply with MICA. Or if you're not, so what is actually the definition of offering? Does the fact that your website is in French automatically imply that you're circulating to French citizens? If so, how will that look like? Or should we just shut down your website? So how does shutdown look like?
So shutdown, we talked about.
Thank you very much. We will need to wrap it up. Thank you. There are 3 groups, each 3
Awesome.
minutes. So yes, thank you
I
again.
tend to take a lot. I'm a lawyer.
We can continue the discussion afterwards. The next group, who's ready? Amazing.
Okay, so it looks like I have 9 minutes and 15 seconds on the
You
screen.
have 2 minutes.
Okay. So we talked about staking and MEV. When you think about staking, you almost kind of put a couple different buckets of like where are the threats to staking right now. 1, you got things like eigenlayer and restaking. 2, you have things like liquid staking tokens, so the rocket pools and Lidos of the world. And then you have kind of the idea of MEV, which I'll touch on in a second. And there's kind of this 4th bucket of why do regulators think that validators are like this golden goose of like, if we regulate the validator, this will solve everything. And that comes down to things like execution and settlement, and also like who's the actual person effectuating transactions on a blockchain. They want to think it's the validator. Truth is, the validator is very simple. It has no role other than to propose transactions to the network and to attest to them. This leads us into MEV, and who knows what proposer builder separation is, PBS. We got a couple. That's essentially this idea that the validator is this very simple actor. They propose things to the chain, they attest to them on chain, and if you allow them to build the blocks, what you're going to create is a centralizing aspect to where the person who's the best at building blocks will actually get all of the stake. That means we will have essentially one validator for all of Ethereum. That's not good. So proposer builder separation is this protocol designed to remove the building aspect from the validator, which we see today on Ethereum layer 1 since the merge. And it created this role called the block builder, which we see today. There's a couple main block builders, and that's now another point of centralization we need to further push out to the edge. This all comes with the idea that when you deal with centralization, you want to minimize it and then push it to the edges on the far extremes, because then you can deal with them in a much better manner. In the next 20 seconds, I'm going to talk about MEV very briefly. 1, MEV, most of it, sandwiching is down 50% over the last year. This is because we have great tools like order flow auctions from MedBlocker and Flashbots Protect. Then the thing we need to think about when we think about MEV is that most of MEV is created when a user makes a mistake on chain, or when a user actually sets slippage limits too high. This happens because users are not informed about what they're doing on chain. It also happens because we have terrible UIs from front ends. And so as we know how to minimize errors from users and create better front ends over time, we're going to minimize MEV even further and further. I got more thoughts, but...
Maybe your name?
Reed, I lead policy at Flashbots. You can come talk to me.
Thank you. Next group. Perfect. So what did the DeFi group discuss?
So hello, my name is Alison Berbetti. Well, in our table, we talk about, I think we focus too much time in what is decentralized. We thought that probably we need, just to talk about legal frameworks in the world, we need to just have definitions about what is decentralized and what is DeFi as well. We discuss about realities, Africa reality in legal framework, Latin America reality in, or South America reality in legal framework. We conclude and we have thoughts about the standardization of regulation, that could be the ideal stage of have regulation in the world. But we were conscious that it could be really hard because we have different cultures. We are in different stage of crypto and DeFi adoptance in different countries. So there were talks about education, that is really important to have interaction with regulators and for them to understand the tech issues and the technical and process of DeFi, what is DeFi. We talk about the importance of motivate regulators as well to just promote and have the regulations, and understood that the discussions important in regulation is to how protect consumers as well. So that can be a motivation for some regulators as well. some governments. So those are some of those. That was the things we talked about.
Thank you. Thank you very much. And the last, a very important group on privacy. It's very important. Everyone has notes, so thank you for preparing.
No, I have to thank my team for preparing for me. My name is Pranay. I'm a lawyer from India, and we represent blockchain and emerging technology a lot. Our table was talking about privacy. One of the core things pointed out to us was at the heart of blockchain is being able to identify everything and trace everything, so privacy and blockchain do sort of run against each other. And there has to be a conversation on how, despite the technology being there to identify every single individual in the blockchain and participating, the system needs to be there to effectively allow for privacy to exist in a blockchain system where everything is recorded and everything can be traced down to the last number and down to the last hash. Primarily by design, it's whether the platform or how we integrate privacy layers into blockchain systems and how, say, oracles or validators would work towards maintaining privacy while also being decentralized is really the challenge. It's also something that they spoke of on the stablecoin part, where how do you retain true decentralization? To take the discussion forward, we tried to lean on what are the current use cases of blockchain. And again, the consensus was that the real only existing use case of blockchain right now that's being effectively used is to move value from one point to another, the transfer of value, the transfer of money, and the transfer of funds. And if you talk about that use case, the major challenge right now being faced by regulators and governments across the world is privacy and how to break down the privacy walls and do enforcement of anti-money laundering, prevention of terrorist financing, etc., while at the same time retaining the ethos of what is blockchain, what is privacy, and what is what the community and the industry really represents is an autonomy of how to use software to give yourself the ability to grow and to do trade effectively, which you weren't able to do earlier. There are blind spots. There are blind spots that exist even today that if we do start putting in systems in place, how they may be exploited tomorrow by regulators and by governments. Validators or developers who are oracles or who hold this kind of data can be forced to give up this data. Whether that sharing of data is something the community or the public agrees with is yet to be seen or tested. So privacy is something that perhaps is a larger, more granular question that we're even seeing right now. And despite so many very smart lawyers being on the table, we could not come to any consensus on any single point of how to or whether to even preserve privacy. There are camps that say money laundering isn't money laundering. If you look at populations that have been either systematically or historically non-banked, and do not have access to banking, if you go to them and say that this is money laundering, that's unfair, that's discrimination, and to a very large extent, it's depriving them of access to the financial world. And that in itself is what Bitcoin and blockchain were there to solve. So if we add a layer of identity and take away the autonomy from trading digital tokens, are we then excluding a certain set of the population of this globe from this technological revolution of being able to trade through blockchain by adding the layer of identity, using a misnomer perhaps that this is breaking a law, that is money laundering. And with that, with 30 seconds left on the clock, I think that was the summary of our discussion.
Thank you. Thank you so much for your contribution to this workshop, and thank you so much for being an unofficial Devcon speaker. So that is very hard to achieve, so congratulations. Thanks everyone for joining us. It was really amazing to have you. And yeah, we hope to see you in 2 years.